Loan originator veteran John Marshall shares his insights into the challenges and rewards of originating construction loans. Bringing over 40 years of experience, John uncovers the secrets of building strong relationships and identifying strategic partnerships. He shares what it takes to build a strong pipeline and succeed as a top construction loan originator.
I've dealt with the average person building a $300,000 home. I've helped a couple IndyCar race car drivers, helped CFOs for hospitals. They're all just like you and me. While they're building bigger homes, they need the help and guidance, and they look to you as the authority. I've learned that the more information you give up front, the less surprises that a customer has. It's a better experience for everybody, which turns into referrals from the client, the customer, and everything. It's a whole different process of getting from referral to closing on a construction versus a purchase.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Grill, and today we have a special guest, John Marshall. And John Marshall is a veteran in construction lending. I've known him for a long time. Really excited to have you on the podcast today, John. Welcome.
Thank you. Thank you.
Yeah, let's kind of get into a little bit of your background and how you got started here. Now, we really haven't had a lot of people that have originated construction loans or, have a lot of experience originating construction loans on the podcast. So I'm personally excited to hear a little bit more about yourself and how you got into this. But maybe that's a good place to start. Why don't you just tell us a little bit about yourself?
Sure. Thanks, Sean. Well, I was lucky to get in this industry back in the early to mid 80s, 1982, as when I originally started in loan originating. And I was blessed by a mentor that said, "Hey, John, do you want to have more success in this business?" Instead of just focusing on the realtor side, he took me under his wings and introduced me to construction to perm financing back then. And it was a bank in Hinsdale, Illinois, Hinsdale Federal. They since, I'm sure, have changed, but I started my origination there through his guidance. I did that. Then I worked with Chicago Title and First American Title, two national title companies on the builder side, working specifically with builders. It allowed me to learn another avenue of how construction works with builders. And I was exposed to construction management, so I learned more about the terminology and everything involved. After that, I was advised by my mentor to get more involved with national builders. So I started with Pulte Homes, and originally in Chicago with their Del Webb division. Then I got relocated to Indianapolis. I oversaw their Indianapolis division and then inherited their Detroit and Ohio markets as well, strictly from a finance side. I worked on the ops teams with these national builders and learned how what a builder-owned mortgage company does, how it is a benefit to both the builder and the consumer. Specifically, is when the market crashed, or what we went through in 07, 08. I was able to help the builders protect their pipeline as much as they could to again continue production. From there, I did that till about 2015. I from then went on and did some consulting for a while. I worked with a bank up in Detroit, helped them set up their construction lending and renovation programs. Then I helped another lender, which was not a non-bank lender, out and on the East Coast, do the same as well. Obviously, you can understand there was a lot of traveling involved, so my family life was more important to me, so I pulled everything back. I've done construction loan origination since, I want to say, 2017 today. I've been with a local community bank here in Indianapolis, been very successful doing it, and that's where I'm at today, and I'm enjoying it. The last 3 years, I've been averaging anywhere from $20 to $30 million a year in production.
So I take it you like construction lending.
It's my heart and soul. I love it. It takes a while. It's not something that you can just learn overnight, but I encourage anybody that's thinking about this. It's not something that you just learn about your programs. It's a venture, but once you do, it's just a fun thing to have.
Well, why don't you think, I've got my own kind of opinions on this, but I'm going to ask the expert here. Why don't you think more people, more originators out there learn the construction lending side? What's preventing them, you think, from, oh yeah, I could go do that and be successful at it?
I think my experience is two reasons I see is one is the fear that they don't know what's involved, and then the second is really the structure internally within the organization of having a process in place for training or certification or mentorship that would allow a loan officer to do what I did. I was a gentleman. I was in my 20s. He was in his 50s. Took me under his arm and helped walk me through it. So I really, that's the two reasons I would say you don't see as many people in it. I probably the other, which would be secondary, would be is the effort that it goes involved in learning this.
Now, why, let's kind of keep going on the effort. I completely understand the training and mentorship being a key piece, but are these loans, I think understandably these loans are more complex, right? Would you say that kind of discourages people when you talk about effort?
Yeah, I would, yes, I would agree with that, Sean, because with typically I've experienced with your traditional purchase transactions, gratification's done within a 30-day to 60-day time period, so it's fairly quicker. Construction to perm can be similar, but as far as if you're looking strictly from a commission standpoint, but really there is a process up front from the time that you're introduced to a client or prospect from the builder. They go through the design stage. That they'll meet with me up front, and I'll educate them on some key questions that they need to know about and key components from a construction financing perspective. And I just use more of a global approach of what I've seen other lenders do. I don't sell my program. I just more try to educate them overall, and so that takes time. And then from there, what'll happen is before they go to contract, they're going to design their home. They're going to be coming back to you, asking you, "Hey, how much can I afford if I want to add this pool or this or that?" So you're guiding them along the process. My goal has always been when it comes to contract signing, I've done everything on my end. All I'm really going to be focusing on is the appraisal and the title. So that way they can focus on the design of their home. We've done the financial analysis for approval all ahead of time.
I see where you kind of circled around to, and we're not going to quite get to that part of the webinar or that part of the
Sure.
podcast yet. And I want to kind of focus a little bit more about, when we think about originators, and I've had many of these conversations, and some of them sound, you go back just say we go back 2019 pre-pandemic, even going into the pandemic, it's like, oh, I don't want to go learn how to do a construction loan. I don't want to learn how to do a renovation loan. This is easy. Why would I want to make it complicated? Why would I, my business is fine. You hear all of those things, but I don't think that people do a really good job articulating the benefits of having, like a construction lending tool set, so that you can take advantage of these programs if your particular, bank or credit union, mortgage company is offering them. I don't really think they understand what the benefits may be. Now, flash forward to today, and all the refi business for those guys have dried up, and one out of every three loans is for a brand new home today. When we think about those originators out there that maybe having buyer's remorse, for lack of a term, of not learning how to educate themselves and become a competent in construction or renovation lending, what would you say kind of are the benefits that are not necessarily on the surface? A more complicated loan, same commission; less complicated loan, same commit. Like, what are the benefits? Especially when it comes to commission wise, that they may not be realizing.
Well, two things. Okay, now I listening to your question that I heard a benefit versus the traditional route with purchases or refinancing. The more complicated it is, the more difficult it is to automate. And as I see our industry going towards artificial intelligence, again, my gray hair might show my age, but I fear that things are going to go more online. as we progress in this industry, and there'll be less human interaction. With construction lending, since there's so many touch points, yes, they can be programmed, but I do feel that, when it's a true custom construction loan, there is still some human interaction that they need, because the components vary so much from lender to lender, and it's difficult to automate that. That's one part that I see. The second part that I would ask or respond to, as far as compensation. Customarily, you are compensated the same as you are with a traditional purchase or refinance. You are compensated at least partially. Some lenders will pay all of your commission up front on the construction process. And again, based on the lender, and you have a good, strong draw department, and however your business process is, you can walk away and not be involved with that. I would encourage a loan officer that's wanting to do this to not take that approach. I myself personally am involved with every one of my clients' draw requests. I think that builds camaraderie with the builder as well with the consumer. They are going to be doing change orders. They want to understand what's impacting, how it's going to affect me from an interest cost during construction. So there's a lot of variables involved. So from that standpoint, you can get paid up front, but you're going to have a lot more customer interaction. And I think those customer interactions will open doors how you handle it down the road, whether it's a referral, whether it's a refinance, if rates were to drop. But I will say this, most importantly, my builder contacts that refer me business know that, hey, this guy, while he may be a little bit old school, he's there for my people. He gives a good representation of our character and our process. So that's what I have found very satisfying.
And you kind of opened up another question for me. Like, when you think about like referrals and lead sources, how does that differ, traditionally kind of from the non-construction lenders to construction lenders? How does that, because it sounds like, it's really being really involved with the relationship is important, and something good comes of that, in the long run.
Yeah, there's a couple of venues that you can do. Obviously, the old fashioned is leather shoes on the road, knocking and making cold calls. But before you go that route, I would, make sure that I understand the terminology. I have a better grip of what I'm talking with a builder, because a builder will know within 5 minutes if you know and understand their business and not just your program. So that's one thing I would encourage a loan officer to do, is learn all the components, all the terminology, learn about the builder, what's their product, how do they operate. But aside from that, if you're working with a traditional bank, I've always encouraged partner up with your commercial side. If there's a guy on the commercial side that works specifically with builders from a commercial standpoint, as far as guided lines of credit or things along that line, that you now become a second source that lenders that are non-bank can't do. It's hard for a non-bank lender to do a spec loan on a home. They'll want to build a spec home, to keep construction going when it's slow times, i.e. right now. You got to keep the engine moving, but you got to balance the risk. But still, there are people that want to buy new homes and may not want to go through the entire construction process. They'll say, hey, I like this at the bones. Maybe I'll make a few changes and I'll go on from there. So that's that. But then most importantly, I always encourage it. Walk slowly, but become active with your local home builder association. The reason why I say walk slowly is learn about the association, get to know the people, try to find out who the key players are. When it's appropriate, try to get active on certain committees or the board of directors. I myself have always made a practice to be involved with government and legislation. I wasn't more of a social. I let other vendors do that. I like the government legislation because that talked about upcoming events and that were important to the builder, specifically within a specific market, whether it's impact fees or whatever. And so when you get more educated on those areas, it makes the calls or conversations with the builder better than it is just talking about, hey, I'm John Marshall with yada yada, and I've got this great rate and great program. I think that expands your relationship. Right now, the big conversation is where our rate's going to be. What do we interpret? So everybody has their own opinion. I encourage to be educated on it and try to listen to what the builders' philosophies are. You may not agree, but you can always have great, strong conversations together.
No, that's super important. And I'm going to kind of pull out what I heard right there. And first and foremost, just really get entrenched with the terminology, the different stages, know what you're talking about, right? You know,
Hmm.
number two in there, you said partner with the commercial side, and that I think is brilliant. I've never heard anybody say that out loud. I've heard people talk about it, but when you think about it, that is it could be a great referral source in both directions and somebody to help, almost like coach. Earlier, you said the mentorship and the training part, I also think is probably in one of those steps. And then third is join the Home Builders Association, get involved with, the trade organizations where, your customers may be hanging out, and getting involved with subject matter that's valuable to them. And I think that's a huge home run because, hey, it's Sean, send me your construction lending business. And, the person on the receiving end is, well, what kind of value can you bring to me? And I think it's great when you're able to have a conversation that's valuable to them. And, I think you did not compliance, but you did advocacy or regulatory mentions in what your example was. And I think that's a huge one, to being able to talk to a builder and, hey, here's what we have coming on, here's how that's going to impact your business. I think that kind of value can go a long way. So did I get those stages right?
Yeah, yeah. I would just add in along with that, like I said, in my earlier career, and this is something that I've always encouraged people to do, is think outside of the box. While I was working at a title company, even though it had nothing to do with title insurance, my boss agreed that, hey, it makes sense. So I took a 2-year course that was construction management, as a certificate in construction management. The first year was basically around what goes in land entitlement process, working with the municipalities. And then the second part of it was is how they lay out the projects, the zoning, whether it's commercial up front, residential, custom. But it's just really neat when you see how that's done. And then the second year was all the key factors. Yes, I did get up on a roof and I helped put up some trusses and learned that I will never be a framer. But you learn about all the different aspects of what they're talking about when they're talking about lime testing or compaction of the soil or concrete. All these things, while you may not know to the nth degree from a structural engineer standpoint, you do understand what they're talking about. You can understand where they're at in their process, and that can kind of help guide you as to where you can push or sit back and learn. But I think that by doing when you try to think outside of the box and not think the traditional route of, hey, I've got this great construction program. Everybody does that. Everybody's got this rate, got that. I think it's more of how can I educate myself so that I can educate others?
No, I love that. We had Jennifer Goldsby from Diamond Residential talking about renovation lending on here, and she threw out a just a really not similar, but similar in the sense of how she approached the market and how she thought about things, and just simply driving by a home that's dilapidated but being sold, and she'd reach out and have a conversation about what financing options were available with a renovation loan, and just really really neat stuff. I think that there's a lot of similarities in what you say there about thinking outside of the box and in growing that business. We talked here about, like really what can help you in your career, if you choose to go down this path of construction lending and learning that. But, when you walk into a room, John, and say you're going into training a bunch of loan originators on how to do construction loans and how to get started, and you're looking at 100 men and women in the room, and you know, you could probably, by the end of, the first hour, tell who's going to be good and who's not, So what would you say some of the characteristics are of originators that you think could be successful in this business?
Well, I would say this, what I look for, and I've have had people approach me that want to get into construction lending. I think, while cliche as it is really their thirst or desire to want to learn more. Um, be humble to know that I don't know everything. When I see that, that is an opportunity that somebody's wanting to learn more and coach is coachable. I've had other people say, "Hey, John, how can I get your construction builder business when you retire?" That's probably the worst approach. Um, but again, I have seen people do that. And so to getting back to your question, I think it's really, where do you want to be 5 years from now? I want to be $100 million loan producer, or I want to learn more about this business at every aspect. Like I said, it really, you got to ask the person, where do you want to be? What's the most important item that you want to be? Do I want to be the top producer? Do I want to make 200,000 this year? I mean, really, you got to think about those things. If those are the people, you are a very transaction related type of individual. And I would say in construction, it's not transaction, it's more of a relationship building process. Whether it's working with the production builders or the custom builder, it takes time. You got to be the one that wants to be, put in the work. I don't want to say hard work. It can be fun. It doesn't have to be hard, but it does take time. Whereas a traditional loan officer may go um, take a realtor out for lunch or go to more transactional. And I'm not trying to. If it comes out wrong, I don't mean it that way. It's a whole different process of getting from referral to closing on a construction versus the purchase.
No, it makes a lot of sense. Now, what kind of advice, so as we think about, those people in the room that, hey, I want to learn how to do this, and I want to get into it, and I want to learn more. You've kind of given some really good steps in, finding a mentor, getting some training, understanding the terminology. Is there any, looking back at your career, is there anything that you think you would have done differently or approached differently, knowing what you know now in getting into this?
Okay. I will say this. I, I was blessed with having a mentor, but I would say if anybody that's wanting to do this, look at where you're at with your company. How committed is your company to doing construction financing? If this is the route you want to go, or if this is a strong aspect of your business, that's most importantly because depending on who you work for in this banking environment, some of these construction loans become portfolios. They're not saleable loans. So it becomes more difficult on the deposits versus the construction loans. I don't want to get into all the complex side, but really from a higher end is you first want to identify, is this a company? Does the leadership here have what I want and thirst for so that I can learn from new construction? And I'm going to check the box and say, yes, they do. From there, then I would be putting a roadmap together of myself personally in the next 12 months. What do I want to accomplish that will help me get more successful to become more successful in construction lending? As I started out in this conversation, I think that you have to be humble, you have to be thirsty, and you have to be able to recognize that you don't know the terminology. So maybe that may start with getting involved with your local home builder associations and identifying some key people there that you can learn from. Obviously, you would like to look to the veterans that you work with. And as myself, the gift that was given to me, I hope before I leave this industry, I can pass that on to someone else because I was very blessed and I would feel nothing more satisfied than is to be able to give the success that was given to me. But I would probably say that, again, going with what you're asking for, the advice, It's really, yeah, putting a roadmap together, understanding that where do I want to be 5 years from now? This is not going to be something that you're going to learn in 30, 60, or 90 days. It's going to take 12 months just to get your feet wet. And then, what you want to look at that is say, okay, where did I succeed marketing? Where did I, where was I tripping my toe up on, getting builders, or what can I do better? I always continue, even to this day, even though I've been doing this now 37 years, I look at what can I do better. And I've learned, as I shared with you, I've learned I separate myself from everybody by becoming more of the educator. I don't sell my programs. I do not talk about rates. I do not talk about closing costs. I don't do it intentionally to hide. I do it because I don't want to commoditize myself. If somebody wants the cheapest rate, I tell them Walmart's down the street and you're going to get that kind of service. I will always be competitive. You got to understand that you can't take the call center approach. You've got to understand who you are. You got to be proud of your education and become a consultant. Once you do that, you'll be working with, I mean, I've dealt with the average person building a $300,000 home. I've helped a couple IndyCar race car drivers, helped CFOs for hospitals. They're all just like you and me. While they're building bigger homes, they need the help and guidance, and they look to you as the authority. So it's not something that comes easily, but once you start learning those steps and you have the good mentorship, it just starts paying off.
No, that makes sense. You really opened the door to a great question here, and when we think about, we talked about like, hey, what makes a good loan originator, but what should we be looking for as we make a decision in looking for like a good lender that supports construction lending, and you kind of brought that up when you were getting into it, like, hey, we'll just assume they check that box, but how do we know that, what are the right check boxes, or what are the right questions to ask of whether or not your lender is, supportive of this, or you could be successful with a particular lender, and you mentioned banks and non-banks, and I'd love to learn a little bit more about that.
Sure. And I was blessed to work on both sides of it. I would say with a traditional bank, whether it's regional community bank that does construction lending versus a non-bank, a traditional bank has a commercial department that has the ability to some degree to offer financing for a builder, whether it be a development loan to acquire land, or it's a line of credit to buy some properties for knockdowns, or a guided line of credit that they can use for um, funding the construction on it based on contract. I don't want to get into the complexity of it, but it's something that allows a builder, because every builder, when you make a call, they're going to ask, do you do spec financing? And that means, will you build a home? Will you finance a home for me that I want to build and sell down the road? The initial reaction is, whoa, 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 no, we don't want to do that because it's too much risk, and I get it. We've built spec homes when the rates were 18%. We've done them in 3%. Now we're in the 7%. So that's a risk area. But those are, when you're working, if that's where a builder is going to look for that partnership. Versus a non-bank lender, they can be as successful in it, but they're going to have to be able to separate themselves with what they can offer that can address or develop or strengthen a relationship. Maybe it might be more towards the production type of builder, where they can offer programs that a traditional bank may not offer, that will help the lender, I'm sorry, the builder, use to sell more homes. At the end of the day, whether it's a custom builder or a production builder, the key word is using finance to help sell more homes. The builder wants to sell homes, and that you got to show that value of how you're going to do it. Listening to what you're saying, a non-bank lender may not have that commercial arm that is out there, but again, there are non-bank lenders that do have a commercial arm. So you want to look at, getting back to your question, is this lender right? I think you'll know when you ask, when you ask how does their construction loan programs work, do they do the draws internally? Do they have a third party do them? How do things operate? And either both can work very well. It's just again understanding that so that way when you go against the competition out there, you can leverage. Okay, this is how we handle our draws, or this is how we handle our inspections. But at the end of the day, a builder, all he wants is simplicity. He wants just to make sure that, hey, if I put a drawing, I'm gonna get paid no more than 4 or 5 days. But idealistically, a builder likes to be paid within 72 hours.
So it's really interesting to hear what to look for in a lender. But in your experience, you've worked for a handful of them. What are some of the red flags? Knowing what you know now, what would you say some of the red flags are that, hey, this lender may not be committed or I may not be successful here?
Oh gosh, that's a good question. Yeah, that's a good question. That's a tough one on the spot that you don't want to single people out. But I would say this idealistically is you want to look at what the size of portfolio they have set aside for construction lending. That's what I would look at. If it's anything less than 50 million, it's gonna be difficult to succeed. Um, that would be probably my start. My second would be more looking at the leadership, their experience. Just like yourself, you want to learn from somebody that knows you want to advance your career. You don't want to go work for somebody that says, yeah, we do construction financing, but they don't understand all the key parts of it. They just say, yeah, we do it because we have it. So just like they're interviewing you, you should be interviewing them for, I've always felt that I want to learn from who I work with. It's hard to work for somebody that knows less than what you know. You can't grow.
Absolutely. It's interesting. One of the things that, I personally get asked is, well, hey, what makes a company successful? We're considering adding, construction loan programs, and what do we need to do to be successful? And it's interesting to hear that some lenders would think the program just runs it. Hey, it's just another loan program that we're adding, and they kind of miss the mark on ownership and having somebody that's passionate and cares about the program to grow it and foster it and has that background to make it successful. The autopilot thing doesn't work. And I think what you're saying here, really kind of echoes that, is like, hey, leadership's got to be behind it. They got to have the right people there. They got to have the capacity to do it well. If you got a $10 million line of credit, or you got a $10 million carved out for, you're not going to be successful because it's not going to churn enough loans in there, and the math doesn't math, right? Anything else that that you could think of that would say, hey, this is probably not a good fit for me, when you think about red flags?
Well, from the experience side, we've addressed that. It's more the second part would be, I've always done is interview the draw departments. There is a national bank that was asking me to come on board, and we talked about it, and they said that, well, we will not send draw funds to the builder. We're going to require that the subcontractors exchange waivers with the title company. I get that. That was done 35 years ago, but in today's world, to be successful, the lender has to be willing to have an agreement in place where that they will, first of all, fund directly to the general and trust the general. We do have a builder acceptance process in place that we put them through. And you have to know that at that point in time, yes, I have the faith that this builder has the experience and liquidity and credit strength that they're going to get it done. So to make that decision. In addition to that, most builders usually will require a certain percentage, up to 10% up front, to be able to get the project started. And if a lender is not willing to do any of those, funding the builder or the general together directly, or giving them some funds up front, That's gonna be hard. That's gonna be hard to compete in. And that's almost in any state. There are some lenders that want to go what I mentioned earlier, and I think where that comes from is again the lack of experience in a custom building arena. They've been primarily working with production builders, but if you get specifically and want to do custom home building, you have to understand, okay, there are certain things some lenders will require no lien agreement signed by all parties. But at the end of the day, if you're going to develop a relationship with the builder, and as I said earlier, it starts with the commercial side. You have a relationship both on the commercial side, you have a relationship on the residential side. Hopefully, you have a deposit relationship as well. That that there's not somebody that's just going to up and walk out the door and put you at risk. At the end of the day, we all want to make sure that the home gets built according to what it is. It's a delightful experience for the customer as well as the builder. And there's very minimal impact on our end as far as the any issues of incompletion or mechanic or material things.
No, that's great. So I'm just going to recite what you said. First look for capacity, make sure they have capacity. The second is, making sure leadership is, real supportive of the program. Research them, make sure that, talk to them, interview them, all important to do to make sure that they're committed to this for the long term. And then look at the draw department, talk to their draw department. How are they issuing draws? What are the turn times? Do they have any strange practices like working with the title company to disperse directly to subcontractors and suppliers? It's going to cause a lot of friction in the relationship. Make sure you know what you're getting into, and then learn the details of the programs that they offer. Do they allow for builder deposits up front, the 10% to get started? Do they have a vetting process that may be underdeveloped or overkill? Understanding kind of really the mechanics of what's going to be involved, because you're going to be the one that gets all the questions at the end of the day. Do I got kind of all those correct?
Yeah, and I don't want to call them unusual or want to single anybody out. I mean, it's just a business philosophy that each company will have. Where I think where the loan officer can be successful is by learning through their local home builder associations, understanding, what is common in that market. What do the builders expect? What's their bar of expectations? Instead of going in and just selling your program, I think you need to do a little bit of homework ahead of time. But I think by doing all those, then you can understand that, okay, I'm looking at this lender and they want to take me on board. And I understand that they work with you as a title company. How does their draw process work? I found that to be very, very valuable information. So that way, when I go to talk with the lender, one, I understand more so the bigger picture of whether I'm the right fit or whether they're the right fit for me.
Oh, that's great. That's great. Now, this is really helpful. We've kind of talked about, what makes a good originator, what makes a good construction lender, what to look for in there. Now I want to kind of pivot a little bit and talk about, how do you know you have the right borrower, right? You've talked to probably, I couldn't even count. How do you know that your borrower's committed, that the construction loan is a right fit for them? Like, how do you think about that when you're getting introduced to a prospect?
That's a great question, and you're right. And I think that's where the education comes into play up front. When a person comes to me and says, "Hey, John, I was given your name, and I'm looking at construction financing. I've never done this before. Where do I go? What's the next steps?" Well, for me, I've kind of automated it a little bit on my end. Before I meet with my clients, I send them a couple attachments. One is the key, I wouldn't say four, there's about 46, but key questions that they need to know. And the reason why I feel this is important is because these are questions that they may not know to ask that jogs their memory and gets them thinking. In addition to that, I send a separate attachment that identifies every aspect of the construction, whether they own the lot, whether they're purchasing the lot, the terms of construction, how long the term a lender will allow, how do they handle draws, whether it's by draws, whether it's flat fee, um, what happens if the home's not completed within the construction time period? What questions do I need to ask there? And then at the end, just again, the world we live in, we got to make sure that um, they are qualified or they meet the ability to repay regulatory guidelines that we have in place. So I, I I can tell right away when I give that information up front, then I have a follow-up conversation with my clients, which is much more productive. They 99% of the time have key questions, and they'll say, yes, I'm going to go forward with this, or no, I think why would I go with this guy building a home versus why don't I go with a production builder that will finance the construction? Each situation is differently handled different, but I start off with, okay, if you're wanting to build your home, this is what you got to look at. So I think it's really more of exploratory, but help educating. Again, I go back to help educating the client, letting them know what they need to ask because they don't know what to ask,
Mm.
and be there. And you can, when you're given the key questions with your lender, say, okay, this is how we separate ourselves from the competition, or on all the key components of it. I call it lender comparison, but on all the key components of that, this is how we handle it if it goes beyond the construction period, whereas others. I've learned that the more information you give up front, the less surprises that a customer has. It's a better experience for everybody, which turns into referrals from the client, the customer, and everything. Nobody likes surprises. I don't like them, and so that's why I try to get in front of everything up front. And that's the best way I would say is identify whether a customer wants it is a good fit for construction financing. That's on that side. Now on the separate side, obviously it's going to come down to his financial and credit, but that's pretty much standard amongst lenders.
Yeah, let's assume they check that box, right? Like, hey, their income, assets, all of that, appraisal, everything checks out. And you're having that conversation, and I really love the education and communication that you spoke to. What would be, in some of those, as you look back, right, and you think about some of those conversations that you've had, what are some of the things that that would come up, or some of the things a potential borrower may say where you start to question and go, this is probably not a good fit for you? What would be some of those characteristics?
Oh, yeah. Okay. Well, immediacy.
Mm.
I got to move in right away. I've relocated from another job. I need a home right now. And I would say that's probably the top one. Um, I'd hate to say the person that is not a good person for construction financing is got to be somebody. I don't want to be so general, but I don't want to be so specific. I would just say that, yeah, a person that in that arena is going to be somebody that doesn't have the financial stability, does not have the capability to um, deal with all the decision making with the builder side as well. Because there's a lot of things that happen when you do this. You're going to marry me as well as the builder for at least the next 12 months to 2 years. So for me, I will say this again, being old school. What doesn't work for me is if everything's by email. I'm much more old school. I meet all my clients face to face, even if it's a $200,000. And some of my builders scratch their heads. I'm like, hey, you know what? It's important to them, and I can look in their eyes and I can see if there's deer headlight look. And I just by doing that, I want this to be a relationship. I want this to be an enjoyable experience. Working with the national builders I've worked with and seeing all the different situations, I want the people to enjoy the construction because building a new home, whether it's production or custom, is a fun process. I let them know that, hey, you know what? When it's up in framing and it's before drywall, your kids around, have them write something on the dry walls of the bedroom they have. Put something personal to the home. Make it fun. So when somebody's not, you'll know right away. It's more of a personality, I guess, matchup as well.
You mentioned John, that kind of like a marriage, and personalities, and I love that. That's kind of echoed through our industry of that comparison. The builder borrower relationship is kind of like a marriage. And I think what people think about that is, it's not like dating, but it's more like a marriage. You're bound to that person for a certain period of time. And in your history, how do you see the relationships that work, and how do you identify the relationships that fail early on?
Well, I will say this: the relationships that work is it's an open, fluid conversation between the two of you, that there's a trust developed between the two of you. I hate to use all these cliche words, honesty and all, but there is honest, open communication. I think that where it doesn't work is when what either party has an agenda that they're not willing to clearly communicate up front. If you're shopping lenders, that's fine. I have no problem with it. I think it's fair to get the best financing possible. And if I can be a consultant, that's fine. On the flip side, if I'm here just to be the loan officer, just to make the transaction, just to get it to the closing table, that's not fair for the consumer or the builder either. So it just, again, I go back to, it should be a very open, fluid conversation. And you know what? I'll help guide you down the path that you need to go. And I just ask for the same from you, is, tell me what your situation's at, so that nobody gets upset, nobody gets surprised. And if bumps occur, we get it. But if we know them in advance, we can work around it.
Yeah, I think in like consumer construction, C2P, world, those types of loans, there's what you say about being transparent. Don't have this alter agenda happening, because you see it on both sides. You see borrowers that try to hold the builder hostage. You see builders that do kind of some questionable practices with change orders, or they're working too many jobs and they just don't want to be upfront about like getting this completed on time. you know from your lessons that you've learned, how do you is there anything the construction lender can do to help make sure that, hey, everything stays on track, and we got to get this thing completed within the term? Like, is there anything that you or a construction lender can do with that relationship to keep everybody moving forward?
That's a very good question. Whether it's prior to construction beginning, obviously it kind of is a no-brainer. But before the first shovels in the ground, everybody should be on the same page as far as where we're at. Okay, the appraisals have been ordered. We've got value. Yes, we've got the financing, all that, just like you would with a purchase. But once it goes to completion, I'm sorry, construction begins. I find very few lenders put on their calendar every 30 days to send a follow up on their construction pipeline. Where are you at? How's it going? Just reaching out. And I think by doing that twofold is, one is you'll identify if there's a stall in the project, or if there's issues with the builder not doing anything or anything. But really, the best advice I can give anybody is that once it closes, yes, maybe you've been paid or maybe you haven't been paid. But this is where the stars shine, is make it a practice. Reach out to them every month and just say, hey, I just checking in. I know that you got a draw coming up. If you can make the builder aware, or whoever coordinates draws, CC you on it, so that way you're aware of the draws. When they get ordered, you can follow it. So make sure that they are going through smoothly, that they're not hanging up and there's no lack of communication, whether the inspection's not been done or it has been done, or if there's confusion on where the checks have gone. And so it's an ongoing process. And I think that's again what I do. And then I do keep going back to old school. When the home's complete, I meet them at their house. It's a celebratory event. I want to see the completed home. They're proud of the home. And depending on the lender you work with, it's just a couple minutes of having them sign some papers that modifies it from interest only to permanent finance. So that's where I think that that just wraps the whole ball together. But getting back to your question is really to prevent any surprises. It's just a constant communication. Don't just put that folder aside and start looking for the next construction loan while that phone's in process. At one point I will make as well is make sure you're really committed to your lender, because nothing's more frustrated. You and I speak to this as a loan officer, because if you're switching jobs in between construction projects, that's nothing that frustrates the client or the builder more, because really when you're the go-to person and you're in the middle of it, now they got to go to somebody that really isn't as strong or as passionate about you. All the effort's gone up. And I've seen that. I've seen people leave where I'll take up the projects for them. And fortunately, I understand what's going on, so I'm able to minimize the impact. But there's nothing more frustrating when I've seen loan officers leave and the builder's calling me and asking me, "Hey, how do I get this done?" And it's my competition. I have no problem with it, but I still have to help guide them through the way. So,
no, it's great, great information to know. We're nearing the end of the podcast here, John, but we do this rapid fire session where I'm going to ask you a series of questions and get to learn a little bit about you. And if you're ready, I'm just going to go ahead and start firing. Would you ever build your own home?
Absolutely. And I have done it.
Oh, that's great.
It's a process that can be very fun, but I know what to expect in it. But absolutely, there is nothing more enjoyable.
Now here's one of the newer questions, and one of my now favorites is, if you could snap your fingers and change one regulation, one law as it pertains to construction or financing or bank regulation, what would it be?
TRID. Yep. I think the government has made the financing process way too complicated, putting in this LE and CD. I'm sorry, it's just gotten way too complicated.
Too different, not the bang for the buck.
Well, I understand that thought process behind it was that no surprises at the closing table, which some lenders did do during that time frame. But the good faith estimate and the truth in lending were always there. They've just repackaged it. I don't think it's as easy to compare as it was. But personally, I think that the government has made just financing in general, way too complicated with TRID. And now I'm fearing the same with this new change with the realtors. So I'm not one to I'm not educated enough to comment on it, but I think the intent is to bring the cost of housing down. I don't think they're accomplishing that either.
Yeah, that's a whole different podcast.
I know.
Different podcast. Now, if you want, and if you haven't done so already, I'd highly suggest checking out the sandbox that is set up with, and I think it was led by the ICBA, and I know Shannon Ferris, my father, he also provided some input into that. In the way that they've set up the sandbox is to trial a new disclosure methodology for construction loans, and it simplifies it, gets it down to one page. But definitely something to check out if you ever have some time.
Definitely. So what do? I go to Sandbox, ICBA?
Yeah, we'll go ahead and host some information on the bottom of the podcast.
Please.
I'll email you over.
Absolutely. That's great to hear.
ICBA was instrumental in getting that approved. And, I think the CFPB's willingness to help, regional and community banks kind of overcome this hurdle of, hey, it's complicated, it's getting in our way. Can we have a much simpler way to disclose a construction loan? I know everybody's kind of got their technology play in line and they got, systems at work, but, this is really important in not just making it simpler for the bank or the lender making the loan, but also making it simpler for the consumer to understand. The dual disclosure, single disclosure is such, you can't look at it and understand, and it's not meant for, an individual to look at that and understand what kind of loan that they're getting. So anything that simplifies that and makes it more transparent, I'm all in favor of.
That's the best news I've heard today, Sean. I look forward to that, and I'm on the same page with you. Tell your dad, Shannon, thank you very much.
Yeah, well, John, if people wanted to get in touch with you and ask you questions or learn a little bit more, what's a great way for them to get in contact with you?
Sure. My phone number is 317-490-1246. My NMLS number is 208358. My email address is jsmarshall59@gmail.com.
All right, fantastic. We'll go ahead and post that here at with all the podcast information. But John, it's been an absolute pleasure having you on here. I'll have you back sometime in the future. But thank you very much for participating in the Construction Lending Podcast.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.